Hey, good morning. This is Mayor Valensky with Driving Markets, driving while talking about markets. Okay, so let's have a look what's likely to happen this week. The markets went up on Friday, but overnight the futures in the US and Europe and Asia are down. Now, the whole question is, where is the market going? It's a big question. No one really knows if it's going to go up or it's going to go down. But according to looking at the indicators, look at the economic numbers, look at the corporate earnings, and look at overall the general atmosphere, then you expect the market to trend downwards. And I've been calling this year, 2023, at a 25 to 30% drop in equity markets, and that could seriously happen. This week particularly, you've got two massive numbers. You've got the consumer price index, which is the retail price index. That is the inflation number at the retail level. That comes out on Tuesday. And then on Thursday, you've got effectively the wholesale inflation number called the producer price index. That comes out on Thursday. Both those numbers are expected to be slightly down on the previous month. In other words, analysts, Wall Street bankers and investors are overall looking at the trend, and they're looking at the continuing trend downwards when it comes to inflation. If those numbers are equal to or lower than expected, then you can expect a serious bounce in equity markets and a sell-off in the US dollar. Conversely, if those numbers come in higher than expected, which I personally think they are, then you can expect a sell-off in equity markets and a rising dollar with a rising DXY index, which is the dollar index against all other major currencies. Okay, so you could have either way. My personal opinion is that inflation is going to come in slightly higher than expected. I don't think we've finished with the overall trend upwards. I think there's been a blip for the last 2 or 3 months. That is certain. However, going forward, I think you'll see a slight rise in inflation as we go into 2023 and we go into the middle of the year onwards, which means there'll be more pressure on the Fed to raise interest rates as those numbers come in. Furthermore, look at the 10-year Treasury. The 10-year Treasury, again, is ticking up. The yield is ticking up. It did drop all the way down to 3.40 or 3.38 a few weeks ago, and now is running at 3.74 upwards, indicating a rising interest rate environment. Remember, the 10-year Treasury and the bond market is the market to look at when you want to get a gauge on where equity markets are going to go. The fundamental foundation of stock markets is the bond market or the credit market or the debt market as it's called. So you've got to look at the bond market and see where the yields are at regarding bond prices and regarding a gauge as to where equity prices are likely to move. Bitcoin is struggling at the 22,000 level. Looks like it's going to float down all the way down to 19,000, and you can expect Tesla and the other high-tech stocks to fall off this week, tracking all the way down back to the earliest numbers back in December. Mayor Valensky with Driving Markets. You can catch me on TikTok and Instagram. Have a good day.